A very happy morning, happy afternoon, happy evening based on what time you're watching this lecture. Friends, now let us start with the basic topic for GST, which is GST in India. The introduction topic. We'll be discussing about a lot of things in this chapter like what is meant by taxes, difference between DT, IDT, features of indirect taxes. We'll also be discussing about how GST was born, what was the need for GST, what is the concept of GST, even what are the benefits for GST, and even the constitutional provisions. What are the taxes that are still alive, taxes which are no more there, and the constitutional backup for the GST law. Right. And friends, each of the chapter, not only this chapter, each of the chapter, for ease of convenience, for ease of understanding, we'll be dividing them into number of sub chapters or subtopics. Right. So this chapter also is not an exception. So right from first chapter, we'll be having that habit of bifurcating the chapters into sub chapters or subtopics of that chapter, so that it will make the discussion very comfortable, very simple and easily understandable. Now, when you talk about this chapter GS in India, the first sub-chapter or the subtopic that we are going to discuss is what is the meaning of taxes, what are the difference between DT and IDT, and what are the features of your indirect taxes. Now, when you talk about taxes, I am very confident that all of you are very much aware of the meaning of taxes as well as the main difference between direct taxes and indirect taxes. Nevertheless, at the cost of repetition, we will go through it again. Now friends, we will be discussing question one by one so that things are very clear. First, understand that no one will pay taxes voluntarily, including Mukesh Ambani. Let us say Mukesh Ambani or Adani, no one. Right, even say a very gentleman person, Ratan Tata, even Ratan Tata may not like to pay taxes voluntarily, he will also plan his taxes. So no one pays taxes voluntarily. So next thing which comes up is, now when taxes is not paid voluntarily, how government is able to collect it. So tax is never a voluntary payment or donation, it is always compulsory extraction or exaction of money by the government, and that compulsory extraction of money by the government is possible only with the backup of legislative authority, that is law. So government, when it is collecting taxes, understand that no person would like to pay taxes voluntarily like a donation, no one. It is always compulsory exaction or compulsory extraction of money by the government, and what backup government is having to compulsorily take that money, that is legislative authority or law. For your income tax act, the backup income tax collection, the backup is Income Tax Act 1961. For customs duty collection, the backup is Customs Act 1962. For GST, the backup is GST Act 2017. You have various types of GST acts, say CGST Act, IGST Act 2017. That is the backup. Right. Now the next question which comes up, why do government require taxes? How do government get taxes? We have understood it. How government gets the taxes? We have understood it. Why do government require taxes? To answer this, understand that government require taxes for dual purposes. We are seeing the macroeconomic view, dual purposes. One is social objective, one is economic objective. So when you talk about why does government require taxes, it is dual purposes. Socio-economic objective. When I tell social objective, government will take taxes. When you talk about example taxes like direct taxes, income tax, it will take more from rich person. When it is distributing, it will distribute more to the poor people, to make sure that the balance between rich and poor is always decreasing. The gap between the rich and the poor is always decreasing. It cannot be made as zero, but to decrease the gap, government requires taxes and it gives back the taxes. So when you talk like taxes like income tax, huge amount of income tax is paid by the corporates and very rich people, and in turn these taxes are utilized for the benefits of poor people in terms of schemes for them. Right, that is social objective. One more is economic objective. Understand that the country and states, rather India as well as all the states, they do at times have to work like a company. Now they too have to achieve growth. So when I tell the second objective here is economic objective. So not only to make sure that the gap between the rich and the poor is decreased, but also to ensure that in the global forum, India is showing its growth. Even for the growth of the country, taxes is required. even it has got other purposes as well. Say for example, when you talk about defense purposes, even for our defense, Indian government do require taxes. Infrastructure and all will come under social economic objective. But when I talk about for our making sure that our border is secured, even for that a huge amount of tax is allocated for defense purposes. So even they have other purposes, but the main two objective is social objective and economic objective, right? So that is the reason why government wants the taxes. How government collects taxes, we have discussed that. Compulsory exaction of money with the backup of legislative authority. Why it is required? To ensure government is fulfilling both social objective as well as economic objective, right? Now, when we talk about different types of taxes, what are the types of taxes we do have? Broadly, we can categorize our taxes into direct taxes and indirect taxes. Direct taxes and indirect taxes. Now, if I were to tell the difference between direct tax and indirect taxes, you can give a very lengthy list of direct taxes and indirect taxes. But the major differences we are trying to understand. Now, first major difference is when you talk about your direct tax, you can always remember a classic example. You can always remember a classic example like your income tax. So, direct tax classic example is your income tax, other example is your interest and expenditure tax. So, the main classic example of direct tax is your income tax. And classic example of indirect tax is your goods and service tax, which is on supply, customs duty, which is on import and export. Even after introduction of GST, your customs duty is still very much alive. These are the classic examples. With classic examples in mind, let us try to differentiate your DT and IDT. Let us take classic example of DT, income tax. Classic example of IDT, it is GST. Now, when you talk about your direct tax, friends, you have to understand that direct tax is on person. Persons includes even artificial person like body, corporate, partnership firm, LLP, etc. So, direct tax is levied on persons, income belonging to a person. That person is not only natural person but also artificial persons such as your partnership firm, a trust, association of persons, body, corporate, LLP, etc. etc. Whereas indirect tax is always on either goods or services. Your indirect tax is levied on what? Goods or services. GST is levied on what? Supply of goods or services. Customs duty is levied on what? Import or export of goods. Import or export of goods. Services is not covered in customs law, it is goods. Import or export of goods. Now, the second difference that you have is direct tax is on income or property of that person. Either it is on income or some property of that person. It is levied on person on what? On his income. Whereas indirect tax is levied on what? Goods and services. Goods and services what? Either supply of goods or services or consumption of goods or services or expenditure or privilege or right of goods or services, including import and export of goods and services. So, when you talk about indirect taxes, you can remember GST and customs duty. Indirect tax is on what? For GST, it is on supply of goods and services. For customs duty, it is on import or export of goods. Import or export of goods. Right? That is the taxable event. Now, the main difference comes now. These are not small differences. The main difference is coming now. When you talk about your direct tax, you have to understand that direct tax, you cannot shift the burden. Tax incidence cannot be shifted. It is to be borne by the same person. Whereas indirect tax, you can shift the burden. Supposing you are talking about income tax by Reliance Limited. So, when Reliance Limited is paying its income tax, it has to pay from its own pocket. It cannot shift the burden. It cannot shift the burden. Whereas when Reliance Limited is paying GST, what it will do? It will collect it from the customers, give it to the government. Collect it from the customers, give it to the government. Understand another way. When a company like Reliance Limited, which is having crores and crores of turnover and it is paying crores and crores of GST, it will not have any problem. Why? Because Reliance Limited will collect GST from its customer and pay to the government. It will collect it and pay to the government. So, after all, it is collecting from its customers and paying to the government. So, it will not have any pain. But the same Reliance Limited, when it is asked to pay income tax on its income, it has to pay from its own pocket. It has to pay from its own pocket. So, always remember that it is very painful to pay income tax. Whereas, when you talk about indirect taxes like GST, it is not so painful. So, when I tell Reliance Limited has to pay GST, what it is going to do? It will collect GST and pay it to the government. It will collect GST from the customers. It will collect GST from the customers and pay GST to the government. It will collect GST from its customers and pay it to the government. When the same Reliance Limited is asked to pay income tax, when the same Reliance Limited is asked to pay its income tax will be paid from its own pocket. Income tax will be paid from its own pocket. The burden cannot be shifted. Here, you can easily find out that here you are not in a position to shift the burden. Income tax has to be paid from same Reliance Limited pocket, so it will try to do a lot of planning. It will try to find out how income tax liability can be burdened. Right, comparatively GST will be huge compared to income tax. So if supposing, I'm just giving some numbers, supposing GST revenue say 5,000 crores that Reliance Limited is paying to the government. Income tax may be only say 500 crores. So GST may be 5,000 crores that Reliance Limited is paying to the government, whereas income tax will be only 500 crores. But still, while paying this 500 crores income tax, there will be huge pain because it has to pay it from its own pocket. Whereas when you talk about indirect taxes, Reliance Limited will collect it from the customer, pay to the government. Manufacturer will collect GST from the wholesaler and pay to the government. Wholesaler, when supplying goods to distributor, will collect GST from the distributor, pay to the government. Distributor, when collecting GST, selling goods to retailer, will collect it from the retailer, pay to the government. Retailer, when he is selling the goods to the customer, he will finally collect it from the final consumer and pay to the government. The only person who will bear the final burden is the final consumer. The person who is going to bear the final burden is the final consumer. So, manufacturer will shift the burden to wholesaler. Wholesaler will shift the burden to distributor. Distributor will shift the burden to retailer. Retailer will shift the burden to the final consumer. So, each one, when they are paying GST, they will keep shifting the burden. Ultimately, the burden will go only on the shoulder of final consumer. We'll take examples with numbers in some time to understand how this will work. Now, another difference that we have is when you talk about your direct tax is progressive in nature. Which means the more you earn, more you have to pay income tax. The lesser you earn, the lesser you have to pay income tax. The more you earn, the more you have to pay income tax. The lesser you earn, the lesser you have to pay income tax. Whereas indirect tax is regressive in nature. Irrespective of your income earning capacity, everyone has to bear equal burden. Now let us say that there are three persons. Mr. A, Mr. B, Mr. C. Now, when you talk about Mr. A, he is very rich. Mr. B is from middle class family, average income, and Mr. C is very poor. Now, when they are asked to pay income tax, they will, when Mr. A will pay very huge amount of income tax. Mr. B will pay average amount of income tax. Mr. C may not pay any income tax. Very poor means he may not end up paying any income tax. But when these three persons are going inside the same shop, assume that they want to purchase some item, a mobile phone or some other items. They are purchasing a mobile phone. So they enter inside a shop and they are purchasing a particular product. The shop owner, that is, assume that the shop owner is fixing a price of rupees 10,000 plus GST. The shop owner is going to collect the same amount of GST from Mr. A, from Mr. B, from Mr. C. The shop owner will not see whether the item being purchased is by a rich person or the item being purchased is by a middle class person or the item being purchased is by a poor person. He is going to charge the same amount of GST. Supposing the GST rate is 5%, assume that the GST rate is 5%, the shop owner will collect same 500 rupees GST same 500 rupees GST from each of the three customers. Each of the three customers. So that, friends, you have to understand. So when the shop owner is trying to pass on the duty burden to the customer, he is not going to see whether the customer is rich person or whether the customer is middle class person or he is a poor person. So the shop owner will try to pass on the same burden. We have assumed that the rate of tax is 5%. If I am the shop owner and I am selling the goods or services to these three persons, my price is 10,000. I will collect 10,000 plus 500 GST from rich person Mr. A, 10,000 plus 500 GST from middle class person Mr. B, 10,000 plus same 500 GST from poor person Mr. C. Now, this is one of the negative side of your indirect taxes. Why? It is regressive in nature. So, when you purchase an item, it is not going to see whether you are rich or poor or, whether you are rich or middle class or poor. Now, this regression effect of indirect taxes can be actually managed by the government. This regression effect of indirect taxes, how it will be managed? So, government will try to have very less taxes or no taxes on the goods which are very essential. So, the goods which are very essential, like say for example, you are talking about food items, or when you are talking about educational services or hospital services, the government will try to have no tax. Either there will be on essential commodities and essential services, either there will be no indirect taxes, either there will be no GST, or GST will be very less. Understand that this is one of the advantage of direct tax, that direct tax is progressive in nature. The more you earn, the more you pay direct tax. But this happens to be one of the disadvantage of indirect taxes, because this indirect taxes is regressive in nature. Irrespective of how much you earn and what is your ability to pay, you have to bear the equal burden. So when three persons, rich, middle class and poor, are willing to purchase the same item, they have to bear the equal burden of indirect taxes. Understand that shop owner will collect and pay to the government. So final burden is always borne by the consumer. So you have to look from the angle of the final consumers, Mr. A, Mr. B, Mr. C, rich, middle class and poor respectively. So they end up paying the same amount of indirect taxes. Now, how to manage that negative side of indirect taxes? Government will plan. Government will see what are essential commodities or what are essential services which are required by all the categories of persons, including poor. On those essential commodities, government either will have no tax, 0% or lesser tax, say 5%. Right? And to manage that, government will take very high rate from posh commodities which are purchased only by rich. On essential commodities which can be purchased by everyone, including poor, government will have less tax. On posh commodities like say for example cars, right, on posh commodities, government will try to take a very high rate of tax, because posh goods will be normally purchased only by rich persons or at times middle class person. So this is how government will manage this regressive nature of indirect taxes. How? On essential commodities which will be purchased by everyone, including the poor person, government will say we don't want taxes, 0% or less taxes, say 5% or 12%. On posh commodities, where generally these items, posh commodities, centralized AC or say refrigerator, or say for example you are talking about your high-end cars. Refrigerator cannot be called as posh, but let us say for example high-end cars. Government will try to have the highest rate, because government knows posh commodities will be normally purchased by only rich person, at times by middle class person. Now friends, with this understanding, you can easily find out what are the features of indirect taxes. The differences that we have discussed, if you have understood the differences clearly, you can easily list out what are the features of indirect taxes, easily. What are the features of indirect taxes? Point number 1, indirect taxes on what? It is on goods or services. It is on goods or services. Your DT is on person, whereas IDT is on goods or services. Second feature is, it is one of the very important source of revenue, and in terms of revenue to the government, more than 50% of the revenue of tax collection comes from indirect taxes, which means indirect taxes contributes more to the government than direct taxes. Very important source of revenue. Third, it has got a very wider tax base. Comparatively, the number of income tax payers are less compared to number of GST payers. So it has got a wider tax base. It has got a very wide tax base. So what is happening is a lot of goods and services are covered in it. So automatically it will have a very wide tax base. So what I am trying to tell here is number of income tax payers are less than the number of indirect tax payers normally. And even in terms of revenue, we have discussed that more than 50% of the revenue to the government comes from your indirect taxes. And the next point already we have discussed in your discussion between DT and IDT, there will be shifting of tax burden, which means everyone will try to shift the tax burden to the next person. If I am supplying goods to you, manufacturer to wholesaler, I'll shift the burden to you. Manufacturer will collect GST from the wholesaler and pay to the government. Wholesaler will collect GST from the distributor and pay to the government. Distributor will collect GST from the retailer and pay to the government. Retailer will collect GST from the consumer and pay to the government. The final burden finally falls on the shoulder of end consumer. Falls on the shoulder of end consumer. And friends, when you talk about indirect taxes, there is no pain. There is no perception of direct pinch. Why? If you remember the example of Reliance Limited that we were discussing some time back, Reliance Limited, when it is asked to pay GST, it will collect it from the customers, pay to the government. Collect it from the customers, pay to the government. Collect it from the customers, pay to the government. But when the same Reliance Limited is asked to pay income tax, it has to pay from its own pocket. There will be some pain. So when you talk about indirect taxes, it is easy to collect and pay because Reliance Limited is not going to pay from its pocket. It will pass on the burden to the next person and pay to the government. So there is no perception of direct pinch. After all, everyone in indirect taxes will try to pass on the burden to the next person and pay to the government. Manufacturer will pass on the burden to the wholesaler, wholesaler will pass on the burden to the distributor, distributor will pass on the burden to the retailer, retailer will pass on the burden to the end consumer. So that is how things will happen. Now, when you talk about this entire scenario, what will happen is there is no perception of direct pinch. You don't have that pain like you have in your income tax. Income tax, though you may end up paying less amount of income tax, but there will be huge pain because you have to pay from your pocket. Whereas indirect taxes, you pass it on and pay to the government. So there is less pain. There is less pain. The next point is, next feature of indirect taxes is, it is inflationary in nature. Direct impact on the prices. Supposing there is a product on which, supposing there is a mobile phone, right, on which the rate of GST today, is say 5%. And from tomorrow onwards, it is going to become 12%. Now, price of the product, say the mobile phone is charging you 10,000. Right. If I am going to purchase today, I have to pay 10,000 plus GST at 5%, 500. If I am going to purchase it tomorrow, the rates are going to increase. It will be 10,000 plus 12%, 1,200. If you look from the final consumer angle, if I am planning my purchases earlier, I have to pay only 10,500. If I am planning my purchases later, I have to pay 11,200. From the angle of the consumer, there is direct inflation. The moment you change the indirect tax rate, there is direct inflation. Inflation, it can be reverse also. Decrease in rate will directly result into decrease in the prices. Increase in rate will directly result into increase in prices from the angle of final consumer. So your indirect tax is inflationary. Your indirect tax is inflationary. Right? Every one of us has experienced that. I will take a practical example which every one of us experienced that. Supposing when you are talking about rise in petrol prices. You always know that when you are talking about petrol, you have even excise duty on that. Even today we have excise duty on petroleum products, excise duty and VAT. Now, if there is a rise in petrol prices due to excise duty, everyone will go to petrol station and try to fill up our entire tank. Why so? Why so? If at all excise duty or VAT on petrol increases, directly it will result in increase in the petrol prices. If at all excise duty and VAT, which are the taxes on petroleum products, these are the taxes on petroleum products. GST is not there, excise duty and VAT. If these taxes are increasing from tomorrow, directly it will increase the petrol prices. So when it is directly affecting the final prices, everyone will try to go to the petrol station and fill the entire tank. So at times you will find that there is a queue standing in front of petrol station or petrol bunk. So this is the reason. Indirect tax is inflationary in nature. And the next point we have already discussed, it is regressive in nature. This you can easily remember with the example of rich Mr. A, middle class Mr. B and poor Mr. C. And let us assume the same rate 5% is there. No change, same rate 5% is there. Whether the rich person is purchasing that product or poor person is purchasing that product or middle class person is purchasing that product, shop owner will sell for 10,000 plus 500. Regressive. Regressive means it will not see who's purchasing. It does not differentiate rich and the poor. It does not differentiate rich and the poor. Whether rich person is coming to my shop and purchasing that item or whether poor person is coming to my shop and purchasing that item, I am going to charge 10,000 plus same 5% GST, which is 10,500. The cost will be the same for rich as well as the poor. So it is regressive in nature. It does not see the difference between rich and poor, and you have also understood that how to reduce that regressive nature. How? Government will try to make sure that on essential commodities which is required by everyone including the poor, government will have either a lesser tax or no tax. On posh commodities which is generally required only by a rich person, government will have a very high rate of tax. So that is how government will manage this regression effect of indirect taxes. And friends, the last feature here is it promotes social welfare indirectly. See, when you talk about your indirect taxes, you have a high amount of indirect taxes on sin goods. Like your liquor and tobacco products, you have high rate of indirect taxes, very high rate. Right. So, government will try to tell that we have increased the rate on liquor, increase the excise duty or VAT on liquor or tobacco so that the consumption is less. So, government will always tell that we are putting more and more indirect taxes on sin goods, this liquor and tobacco, so that their consumption is less. But at the end of the game, you will find that consumption may not reduce so much, but revenue to the government will be huge. Why? Government is telling everyone that we are having very, very high rate of indirect taxes on these goods because we want their consumption less. Basics of economics. Higher the rate, lower the consumption. Higher the price, lesser the consumption. But it may not happen or work out with alcoholic liquor and tobacco, these sin goods always. In spite of a very high rate of indirect taxes on these sin goods, the consumption may not decrease to that extent proportionately. So, government will end up getting more and more revenue. But in a way, government will try to always project in this way that we want decrease in consumption of alcoholic liquor, decrease in consumption of tobacco products. So, we are having a very high rate of indirect taxes on them. So, government will try to project it, and few governments really that intention is there. But normally what will happen is government also knows for a fact that in spite of that increase indirect taxes on these sin goods, consumption may not decrease so much drastically or proportionately. Therefore, the revenue to the government will be huge. Right. These are all the features of your indirect taxes. What are the features, friends? Quickly. It is on tax on goods and services. A very, very important source of revenue for the government because more than 50% revenue to the government comes from your indirect taxes. It has got a very, very wider tax base comparatively when you see your income tax or direct tax. And there is shifting of tax burden. So, when you talk about your indirect taxes, there is shifting of tax burden. Everyone will try to shift the burden to the next person. Manufacturer to wholesaler, wholesaler to retailer, retailer to final consumer. The person who actually bears the burden is the end consumer. And as it is indirect tax, there is no perception of direct pinch. Why? Because the seller will try to collect the taxes from the buyer and pay to the government. So, though seller is paying the taxes to the government, he is not paying from his pocket. He is collecting it from the buyer. So, there is no perception of direct pinch. Unlike your income tax, it is inflationary in nature, regressive in nature, as well as it promotes social welfare indirectly. Friends, these are all the features of your indirect taxes.